As you may have seen, Bitcoin's price dropped nearly 10% in a matter of hours, the largest intraday drop since January. We all know that where Bitcoin goes, the rest of the market follows. According to CoinMarketCap, the market cap of cryptocurrency fell by about 7%. It was approximately $1.8 trillion yesterday and is now $1.67 trillion. Aside from that, no one can overlook the current Russia-Ukraine conflict and its worldwide consequences. You know, the most important thing while doing any type of trading is your mental control over your decisions, and in crypto you need that a bit too much, because if we can have a 100% increase in a day, then a 100% fall can also happen. But before we get in, I would like to welcome you guys back in another video on our channel where you always get your daily dose of crypto news and entertainment. Keep in mind that I am not a financial advisor and nothing in this video constitutes financial advice. It is simply my market predictions based on my research. So, without any further delay, let's get into it. The main cause for the crash was that the Federal Reserve hiked interest rates by 0.5%, which is the largest increase since 2000. Markets initially responded positively just because some anticipated a 0.75% rate rise. Investors were also encouraged by Federal Reserve Chair Jerome Powell's cautious optimism that inflation could be brought under control without causing a recession. However, it appears that the hope was brief and the extreme fear gripped traders. Moreover, equities and cryptocurrency prices plummeted as the market absorbed the interest rate rise and the ramifications of a hawkish Fed. Smaller cryptocurrencies that have outpaced Bitcoin and Ethereum in recent months have suffered the most during this latest crash. Some suspect that a huge USD sell-off on the decentralized exchange curve fueled speculations that UST may lose its peg to the dollar, which will cause the price of Luna to plummet even lower. However, Terra inventor Duke Won refuted the reports on Twitter. Economic tightening tends to encourage investors to flee high-risk assets like cryptocurrency, and that is why the small gain was unexpected. What concerns now is whether Bitcoin and other prices can maintain their current lows or fall lower. Now further, let us discuss if we should buy in this crash or not. As you know, cryptocurrency's values are very fluctuating and the sector is still young and unregulated. Investors should consider how Bitcoin may perform in the long run and how it might fit in with the rest of your portfolio. The first thing you should remember before investing at this time is not to expect too much. Across the board, cryptocurrencies performed exceptionally well last year. However, things have changed. There are recessionary worries and inflation is at its highest level in 40 years, and the current Russia-Ukraine crisis just adds to the global anxiety. Let me add that it has been more than 6 months since Bitcoin reached an all-time high, and it has struggled to gain momentum in recent months. This is not to say that Bitcoin cannot achieve new highs in the long run. It is just that expecting the same price activity we witnessed last year in the short future is unrealistic. In fact, cryptocurrency's values might fall considerably more. Secondly, cryptocurrency investments are high risk. They may perform admirably, but they may also lose all of their worth. That is why it is essential to only invest money that you can afford to lose. Before you purchase any cryptocurrency, make sure your emergency fund is well stocked and your retirement funds are up to date. Furthermore, if you have extra money and have done your homework, now may be an excellent moment to acquire Bitcoin. Just don't go in just because it's inexpensive today, because purchasing Bitcoin for $32,000 will appear to be a good price if it later rises to $100,000 or even $1 million as some analysts expect. But what if it falls below $10,000? It is easy to be caught in the hype. However, as the Federal Reserve implements additional economic tightening measures and recession worries mount, we may be in for a rough patch. Make sure you're ready for them before you spend your spare cash on crypto. So that concludes today's video, and I hope this information was helpful to you. Further, do let us know if you want us to make a video on any of your favorite topics. Now, if you have liked the video and found the content helpful, then don't forget to give this video a thumbs up and do subscribe to our channel to get us more subscribers and for weekly content like this. Thanks for watching and see you in the next video. Until then, goodbye.